Welcome to the closing beat, everybody. Happy Monday. How you doing today? You guys having a good day out there? Hope everything's going well for you here. This is a quick show that we do called the closing beat. Just a fun way to go over the stock market for the day, so I hope you'll join us here and go over this with us. If you have any questions, we'll answer those as we go. There's a little delay, so we just have to get used to that. But yeah, it's just a fun show that we do. There'll be no closing beat tomorrow, by the way. Tomorrow, I'm going to spend some time with the little ones, so no closing beat here. But we're also playing a game. If you want to play the game while we're away tomorrow, you just go to Guess the Dow. You go to jazzwealth.com/guess the Dow, and you can actually guess where do you think the stock market's going to close next week. Right? Our winner last week was a customer of ours, Maria Chavez. She was only 5 points off, so we credited her account $100. If you're not a customer, no big deal. You can still play. It's not like a marketing pitch or anything. We'll send you a $100 gift card. You don't even have to give us your address to play. If you win, we'll ask for your address, but that's the only email you will get from us. So I hope you enjoy. And then this Thursday, our class for customers, we're going to talk about the new high-interest checking and savings accounts that we have here at Jazz Wealth. So we'll cover that on Thursday. If you're interested, you go to the website. There's a banner up there at the top, I think. You can read about it if you're interested. We're only offering that to customers here. And yeah, hope you check it out. So if you didn't know, we do classes every Thursday for our customers. All the events, by the way, if you're not a customer, you can still see the classes that we're going to do on the events page of our website. So if you're curious, like if these things even sort of fit what you're looking for, you can check it out. Anyways, that's enough marketing, I think. Let's talk about the stock market. 57 points on the Dow, not bad. S&P higher by 20, not bad. the NASDAQ added 75. That's a pretty good day, and the Russell added 1%. So actually a good day for the Russell. That's pretty good because last week the Russell 2000 was the best performing index out of the group. And so today it continues that, and you like to see that. I mean, let's go over to the charts here. We'll take a look real quick. So here's the S&P 500. We're flirting at making those new highs there. Over the weekend, we had the Vice Premier of China, Liu. He came out and said just positive trade comments. They said they're going to work together on phase one. They're excited to keep going. Lots of good stuff. There was no negative sort of, oh, but look out or retaliation type talks of any kind. It was just all positive there. And so the S&P moving back towards those highs there, the all-time highs. Now, we keep getting beaten down every time we go to those highs. So everyone and their mother we'll be looking to see if we can break above those highs in a meaningful way, not just a poke and then we come back a little bit, but a meaningful break. And so it could largely be earnings that helps us move over those highs. You got 123 S&P 500 names reporting this week throughout the whole week. So it's going to be a busy one there. Amazon, Ford, you name it. I'll go over a bunch of them in a minute, but a lot of them reporting, and so everybody's just going to be looking at that high. That's your magic number. If you care where the markets go, about 30-30 on the S&P 500 is going to be the magic number. I mentioned the Russell performing well. Last week was best performing index, up just over 1%. Today had a 1% day as well. It's good, right? Like it's exciting to see that, but all in all, the Russell's been in a range and since basically April, just trending between these highs and these lows. Not very exciting. So really everybody will get more excited once we do break above the highs, if we do. Now you don't expect all that to happen in one shot there. You wouldn't expect the Russell to get all the way up here, then muster up enough energy to break above those highs. So I think you still got plenty of time on that one, if it even happens in the first place there. So we'll see. Last week, the Dow, well, every market had a positive week, but the Dow lost 0.2%, so a little bit of a weak one there. But other than that, everything else looked pretty good. The Dow mainly was last couple days of the week because of Boeing, mainly in the last couple days there. So Boeing holding things back, a little bit of a gain there today. Still weakness in Boeing. We'll cover it there as we go. Also, you got the Fed announcement coming up. You know, I've been pointing out every day, 3 Fed members talking, 4 Fed members talking, got all these people, they're out there trying to let you know that, we may not need to cut rates. And while most people think they still will cut rates here on the October meeting, we've now reached a point where the Fed won't be talking. From now until October 31st, you won't hear a peep out of the Fed. It's known as a quiet period. So they've done everything they can. They all went out and worked. I'm not sure what they do now between now and the Fed meeting, but they're going to be quiet. You won't be hearing anything from them, which is a good change of pace there. I think they should be more quiet. Right? We don't need to hear from them every single day, right? They used to not even do these quarterly report or these monthly sort of updates like this, but nonetheless, they're out there, so they're doing what they do. All right, sector-wise here, last week, if you missed a little bit of it, your biggest movers Last week were healthcare. Coming up off the lows, that'd be your biggest moving sector from lows to highs over the week there. You also had Reits late in the week there start to poke up to highs. We've been talking about the Reits kind of coiling up near their 50-day moving average and just sort of being quiet. Well, they broke out the other day. It continued that today. Very strong, actually looking pretty good. On the downside, your biggest mover last week, your biggest mover to the downside was XLE, energy space. Although that had a really strong day today. We'll go over some of those here in just a second, oil and things like that. Tech was the second worst performer, but not too bad. Just pulled back a little bit more than every other sector besides the energy area there. So just giving you an update. I don't know if you like that sort of thing or not, but today you got OIH. These are your oil service stocks. Great rally up off the lows there. It's going to be because of earnings in the space. We had Schlumberger the other day. SLB is the symbol. They okay on earnings there. Halliburton today missed on earnings, not very good at all, but heavy volume there, pushing it up off the lows. Great little rally there. And those two make up 30% of the OIH. And so naturally, although this is very weak, there's no way can you say, oh, that's a bottom. But still, a great day for the oil service companies, up off the lows by about 3.5%. So that sector kind of stood out. A lot of people talking about that one today. Transports continue their move. They had a good move last week and continue to do that today, up about 1.5% on the day. Basically, it was across the board. You can look at the rail companies there. Norfolk Southern did really well, reporting their earnings last week. Kansas City Southern still moving forward from their earnings. They had a great earnings announcement. We covered that there, of course. Last week. And Union Pacific higher on the day, so the rails really help supporting in the transport sector, but also FedEx did well, 1.5% on the day. Makes you want to look at UPS as well. Had a 1% gain on the day, so you kind of understand now why transports were a little bit exciting today. Financials, XLF is the one we'll use just to track the financials, moving back into these prior highs, very similar to the overall stock market, where we know resistance, right? Whether you like technical trading or not, it's a known resistance area. 2870 is your magic number there. The financials have moved now basically up into that area. And we'll see. I mean, so today, JP Morgan was very helpful. Had a strong day today. The stock moved up to new highs there. Very strong, actually. So a lot of good comments out of JP Morgan lately. Well, Jamie Dimon, to be exact, the guy that runs JP Morgan. But so that helped the financials, looking good there. XLF, of course. Regional banks did okay as well. Tech stocks did all right today, recovering from some of Friday's decline. So not bad there. Just all in all, pretty good. A lot of the defensive names, or areas like gold. So gold was down 0.5% on the day. The gold miners saw weakness, about 2% down on the day, just continuing their downtrend. Bonds moved a little bit lower, which means rates ticked up just a little bit. I don't think most people mind about that one as well. And utilities, I think, finished positive. Yeah, a little higher, about 1/3% on the day, but really a lack of volume, a lack of attention over there. Everybody else was in the other areas of the market, just seeing that they were doing well. Semiconductors did okay also. The semiconductors moving a little bit higher today, almost 2% on the day. So not bad there. Let's cover some individual stocks. So you got Boeing in the news again. This is carryover from Friday's sort of funny, not funny, but you know, comments. The comments from the pilot were sort of funny, but the event is not funny. Anyways, the stock was lower Friday, just carrying over on that today. It ultimately finished up off the lows today. The gap down today, that initial sell-off during the day, you had a lot of option trading going on down at those lows. You had a lot of stocks trading hands. So a lot of people deciding they were going to buy that dip. They were also downgraded by UBS and Credit Suisse today. So you had to expect a few downgrades were going to hit the stock there following what happened on Friday, if you're paying attention. That means the stock's down about 15% from recent highs. I'm going to use these highs right here. If you go from right here to about where we're at, that's about a 15% decline. Is that a discount to you? Like, do you look at that and go, all right, I've been waiting to buy a bigger stock like this, something steady that I can get into that maybe trades at a discount? 15%. Where do you land on that one? Let me know. I would say beware, though. They report earnings Wednesday before the markets open, so you've got to expect more fireworks from their earnings coming up there. Did you see Peloton today? PTON's a new IPO. This is the one you see on TV. They got the bike with the TV on it. You pay a lot of money to have the bike with the TV, and somehow the TV makes you turn it on, and then you're going to see people working out, and you're going to say, well, why don't I pedal? And then you're going to pedal a little bit, and somehow it's worth more than just going to the gym, or it's going to be better for you for as low as $58 a month. You've all seen the commercials. Anyways, today's the first day where analysts can come out well, most analysts can come out and give their guidance on it. What do they think? You know how we always say an analyst upgraded or downgraded a stock? Well, now you're going to start seeing this on Peloton. There were actually 16 different coverage initiations, I guess is how you'd say it. First initial coverage of the stock. There are now 19 analysts that are covering this stock here, so you got a lot of data to go through if you want to. I basically summarized it for you. There are 17 buys. There are 2 holds on the stock. There are no sells, so nobody thinks this stock is headed lower. The highest price target is by Goldman Sachs. They're at 37, which puts it way back up off the charts, off your screen there. You can't even see it. And the lowest is still off the charts at $29. So people, all these analysts are bullish on Peloton overall. I don't know. I don't know enough about the company. I don't get it, but it's just me. I'm healthy too, right? I got this drink today. It's horrible, by the way. I got this drink today. It's got blood orange, elderberry, turmeric, which you can taste, ginger, and black pepper. Yeah. Got to be healthy, she says. News Corp stock was a little bit higher today. I don't know if you like this or not, but they made a deal with Facebook to feature their headlines from the Wall Street Journal, the New York Post, and some of their other holdings. And so that's good news for them. Get more attention, maybe some more subscriptions. Facebook was also higher by 2% on the day, trying to erase what happened on Friday with Facebook. So not bad there. Sticking with tech, you got Apple hitting new highs there, convincingly hitting new highs, and now the most valuable company in the S&P 500. Raymond James was the reason. They raised their price target to 280. 280 was the magic number. So you got 240 today. They think 280 in the next 12 months on that one. And all because of the iPhone sales. We'll find out from Apple's earnings, of course. I think it's not tomorrow, but the next Tuesday is when they report. So we'll see what happens there. You got a lot of earnings. If you own stocks and you want to see what's going on, you got a lot to pay attention to here in the next 2 weeks. 66% of the S&P 500 is over the 50-day moving average. We were at 62 on Friday, so looking pretty good there. You had 37 new 52-week highs. We were at 27 on Friday, so that's good. 37 new highs today. It represents 7 sectors, good diversity in there. I'll continue to say you had some defensive names, you had some cyclical names in there that look pretty good. So some good new highs there. McKesson's going to be your most volatile. So number one, remember we talked about this. This does not break out and give you a replicated move. So because of how extended it is, I will stick by that anytime I see it because it is true. It happens every time. The stock was overextended going to new highs. It's exciting because we own the stock. We're in our portfolio here. So we're excited, that it's obviously doing well. But you have a move to new highs today, which make everybody here over the last couple months go, well, hot damn, that's a good profit. From 130 to 150, I think I'll take some money off the table. Creates a little pressure. You also had the settlement in the opioid cases today. That created a lot of volatility and a lot of adjustment by the big guys there, but all in all still very strong, although it was down on the day. It did hit new 52-week highs. You also had your home builders poke to new highs, but they're showing their signs of being extended. I try to point this out when I can, not so you make a trade or do anything, but just so you can kind of see how it works. NVR, home builder there, hit new highs, but the sector and everything very much overextended. So that started to pull back a little bit. Lennar, more famously, or probably more well-known, Lennar, hit new highs, also started to pull back. The sector itself has just done well and is ready to pull back. Here's the home builder sector, which includes other stocks too, but just to give you an idea. Poke to new highs, but everybody sees that it's a little overpriced in the short term. And so you got to recognize when that's coming so you don't fall for that trap buying stocks at overpriced values. You could also look at the ITB. This is just home builders, this is ETF for just home builders. So also a little extended, actually gapped to new highs today and finished near the lows. So I think that's okay. In the short term, you want to see things take a little bit of a break. JP Morgan, we pointed out, that was one of the new highs on the day. Fastenal hitting new highs as well. Still extended in the short term, makes you really cautious about chasing these sort of things, but this is a carryover momentum from their earnings. So looking good there. And what else do we have? New lows. You've got 2 new lows. They're the same names, by the way, as Friday. They just closed up off their lows. So although it did hit new lows today, Devon Energy put in a good 2.2%. Oil service stock there, and we know the oil service area did well. Doesn't mean these stocks are putting in a bottom. You got to recognize that this sector just had a good day. All in all, from the not from the earnings, but from the results of Halliburton and Schlumberger, pulling up the sector in general, broad-based rally overall as people were trying to dive into that. EOG, by the way, same thing, hit new lows just ever so slightly and recovered up off the lows 5%. So looking pretty good there. We got a couple stats plays we're following on here. LHX very nearly hit the goal for today. We said 75% of the time it is higher by 2.58% in the next 5 days. Today would be day number 1 of that, so we'll just tick this one over there. Almost hit the highs there, but did pull back on the day, only added 0.8%. At one point, it was up over 2%, but still has some work to do if that stat's going to actually play out. And CVS was the other one, but in the opposite direction. We drew a line just to show. 62.1% of the time, it's lower by 1.34% from where it was on Friday. Today was a good start. We basically got half of it today. So we'll see what happens over the next couple of days. I'll update you guys again on Wednesday about that, since there is no closing beat show tomorrow. So if you came late, no closing beat tomorrow. You'll have to go it alone, but we'll be back on Wednesday. All right, earnings. This is a different one. Tell me if you care, if this helps you in any way, or if you like this, or this is really boring, because this takes a lot of work to put this together. If you don't like this part, I'd like to know, right? I don't mind. You won't hurt my feelings. Some of you do, but you won't hurt my feelings. Tomorrow, in the morning, you got McDonald's reporting earnings. They beat on earnings 54% of the time. They beat on revenue 69% of the time. 41% of the time, looking back over the last 20 years, so from 2000, almost 20, this will be 20 years now, it's higher 41% of the time, despite whatever the earnings are, whether they meet, beat, or exceed. 41% of the time, it's higher. Now, this next earnings report tomorrow is going to be for the third quarter. And so for a lot of companies, maybe not McDonald's, but for a lot of companies, you look and see, is this typically a soft quarter before you go into the holiday season and things? So we look back on the third quarter there. For third quarter earnings, and if you look back since 2000, they've only missed 3 times. That's pretty good, right? 18 times. They've missed 3 times. We'll see what's going to happen going up forward there. So pretty good stats on McDonald's all in all. If you own it, I'll wish you the best on that one. We'll see what happens. Kimberly-Clark had a good day today, 1.4%. Got a customer who likes playing this one, so I thought I'd squeeze this one in there. 69% of the time they beat on earnings, about the same. They beat on revenue. It is higher 50% of the time on earnings day. So tomorrow they'll report the earnings. Will it be higher or lower? 50-50 shot that it's going to be higher or lower. The last 5 times that they missed on earnings, the average gap was still positive 2.03%. So it just gives you a little comfort if you happen to own the stock there. Even if they miss on earnings, it was still higher by about 2%. So even if it's not higher by 2% tomorrow and it's higher by 0.5%, still a win, right? We'll see what happens. A couple others, and then we'll move on. You got UPS higher on the day by 1%. We talked about that today in the transport sector. Well, they report earnings tomorrow. Sort of a wash. 58% of the time they beat on earnings, 51% on revenue. It's higher 51% of the time on earnings day. It doesn't help you, really, so a bit of a back and forth there. Revenue is always the focus with this company, so what we did is we took it a little bit further, and we said, what happens when they miss on revenue? Let's just assume that FedEx is all doom and gloom over there, and UPS starts going doom and gloom tomorrow. Let's assume that they miss on earnings. When they miss on revenue. When they miss on revenue, if we look back over the last 10 quarters, the gap down averages 1.18%, right? And if you look at the last, as far back as we can go, 2000. So we look at all the third quarter earnings. This one would be interesting because maybe there's a little soft spot there before they head into the holiday season. If we look back of all the third quarters, over the last 18 years, they've missed on revenue 9 times. 50% of the time, this is a very weak quarter. I know I've said 50% a lot. That's just the stocks that we have to look at for right now. So I don't know if that helps in any way, but sometimes stats are cool. Chipotle about to hit new highs there, but they've got earnings coming out as well. This is a mover. Careful. You got to know what you're getting into on this one. They beat on earnings most of the time, 74% of the time. It's a big mover. I'll give you an example. Last quarter, they beat on earnings, beat on revenue. The full day move was 38 points, right? So from open to close, the full day, including the gap, was $38. It's an $800 stock. I get it, but still. The quarter before that, they beat on earnings, beat on revenue, but the stock was down $31. right? The time before that, almost $60, $14 the time before that, 25 positive the time before that. The first quarter of 2018, a positive gain of $82. So careful, right? That's all I wanted to say there is if you're one of those stock picker people, yeah, this may be one you want to be careful with. Use some options there and be careful what you're doing. So that's that one there. In other news, well, let's cover the earnings. Other earnings coming out tomorrow. You got Biogen, BIIB is the symbol, Lockheed Martin, Procter & Gamble, Pulte Homes, Sherwin-Williams, Travelers Insurance, UPS, United Technologies, and then in the afternoon, all the focus can be on Chipotle because the only other earnings is Texas Instruments, if you care to follow along with that one. Verizon announced they're going to sell off the Huffington Post website. And what else? If you like reading Barron's over the weekend, as I'm sure you all sit around and do, Barron's likes ConocoPhillips. The ticker symbol is COP. I didn't look at it today. Oh, yeah, discounted here throughout the year. It had a good day today, about 3.7%. They said the stock is cheap. They got a strong balance sheet. They've got low costs, and we like the stock. Barron's said that, not me. So if that helps you in any way, I'm glad to offer it to you. All right, I'll take a minute here and answer any questions if you have any. Otherwise, we'll wrap it up there. Remember, no show tomorrow. Taking the day off from the closing beat, but happy to help. We'll be back on Wednesday, of course. And let's see what we got here. So, you like the stats? You like earnings stats there? There's a lot of them. I mean, just because there's so many stocks coming out, I want to try to give you guys some more data there. Cool. Snapchat's not coming up yet, so nothing there. I don't know when they report earnings there. Next earnings announcement should be an exciting one. That one always gets attention there. Snapchat, October 22nd. That'll be tomorrow after the close. I don't have them on my list. Oh, my list cuts off. Sorry. Yeah, Snapchat. So there's not a lot of reports on this one. They've only had 10 earnings announcements since they went public there. They're expected to lose 5 cents a share, so that gives you kind of an idea. And they're not expecting, Wall Street's not expecting them to make any money. They're expected to lose 5 cents a share on sales of $435. That'd be in the millions there. They've beat on earnings 70% of the time, 60% of the time on revenue. That just tells you 7 out of 10 times they beat on earnings because there's not a lot of data to go on. Last time they had earnings, it was a $2.78 move. It's fairly volatile. It gapped down 9%. Oh, I see it there. The time before that gapped up 3%. Yeah, I mean, it could be a pretty volatile one there. So there you go on the Snapchat. Hopefully that helps you there if you own it or you're playing along. Yeah. Any thoughts on Fran? Yeah, getting a little attention here lately. Is this Francesca's? There we go, coming up. All right. Yeah, getting a little bit of attention there. You don't like to see that everybody's running away. The volume sort of died off there in the short term, but that's okay. It's had a good run here in the short term. So if it took a break and it pulled back and it just wasn't scary, like crazy pullback on high volume, you'd be okay. Yeah. You think that the tech and financials are getting a little extended? Any chance of another correction? You can make that argument. Semiconductors, tech, home builders. There's a lot of sectors you could say in the short term they're just a little overbought. Transports, right? UPS could come out tomorrow and knock the whole thing out of the woods, right? Because you've got UPS already up, transport's already up. If they come saying doom and gloom, UPS, Caterpillar, FedEx, those are all sort of barometers of the overall economy globally, by the way. So if they don't have some good things to say, no pressure, UPS, but that could certainly help start any kind of a pullback you might be hoping for. Yeah. The stats don't change on a 10% decline. So those are year over year. And so even though November, December typically are bullish, aside from last November, December, right? Doesn't mean they have to be. But even though they're typically bullish, the stats are still what they are, right? 10% decline could happen any point. You got to be ready for it. We haven't had that happen. I'd be interested to know how, that'd be a good study. Look back and see, although it's supposed to happen once a year, how many years did it not happen, right? Because we know what the stats are, so we can just go back and see, like, how long has it been, things like that. That'd be cool. Yep. What do you think? What was the one there? NTSX. What do you think of some of these funds, these balanced ETFs there? I mean, now with things being commission free, like the way we build our portfolios is using all the underlying stocks because we can. We never had to pay commissions anyways. But now you kind of have the opportunity to say, do I like this fund and can I improve on it? If you look at the ETF, the NTSX there, if you look at it and you go, you know what, I'd like to be a little heavier equities or whatever, couldn't you just steal the positions that they have and rebalance them the way you like? I mean, they report the positions every single day. So if you like the fund, then great. Yeah, no problem. Stick with it. If you're enjoying it, it's a good ride, and you enjoy that sort of passive approach, great. If you like to be a little more active and juice it up a little bit or slow the risk down a little bit, you could, really. Yeah. So anyways, I don't know if that answers your question. I can't see the question anymore. What platform has the stats like LIHX? It's just the data. We just pull the data. Right, so just on all the different stocks. We're hinting at the idea of like trying to put that together where customers can do it, but it's just not that popular with customers, nor is there really a need for it. But you can buy any data that you want. If you want to buy all that data, it's rather pricey, but then you can compile it in any way that you like. So we're just playing with ideas. I like to point those things out. Yep. Well, we've covered the energy sector there, so now you know the results from Schlumberger, Halliburton, helping to kind of goose the sector there and forcing people to that buy into those ETFs to sort of rebalance a little bit, so that might help a little bit. Why is Buffett so bullish on the Bank of America? I don't know. I don't follow his thoughts or anything on that one, but I would agree he is. He's got a lot of preferred shares still, I think. I don't think he converted everything. Yeah. Why are so many manager advisors against actively managed funds? I don't know any that are. I don't know. I mean, I know this is the tough part. Like if I make a video on how to invest in something, there's always going to be someone that wants to do it differently. It's just like fishing. I always use that same example. It's exactly like fishing. If you catch the fish, all is good, right? Who cares how you did it? But there's always going to be some people that want to do it earlier in the morning, use certain types of baits, have a sort of different thing. There's people, like a friend of mine that I fish with, that believe the day before he fishes, he doesn't wash his hands. He doesn't like put lotion on. He doesn't wash his hand with soap or anything. He thinks that has something to do with it. Maybe it's a superstition, like the banana on a boat sort of thing. But at the end of the day, yeah, some people like active funds, some people like passive funds. It really doesn't matter to me as long as what you have chosen or who you're working with is able to get you to your goal, right? At the end of the day, I think it's a distraction from you questioning, am I getting towards my goal? How many dollars do I have to put towards this thing? What return expectations do we have? This whole passive and active thing to me, is a bit of a distraction when you should be focused on you. So one type of industry here where you can raise your hand and actually be selfish without coming across as someone who is selfish, right? This is your dollars. You get the most out of what you need for your dollars there. All right. I probably missed a bunch there. Sorry about that. He asked to be able to raise a stake beyond... Oh, I gotcha. The biggest earnings mover this week, I'd bet it's Amazon, just because it's the bigger dollar amount. Chipotle could be the biggest mover, but Amazon comes out this week as well. Do I have a quick way to do that for you? Let's see. If we're looking this week... I don't think I have a quick way to do that. Oh, yeah, let's see what I can do. Most volatile stock today, or most volatile stock to report. I don't know that this is going to be accurate. But it looks like the most volatile stock is Roku. But they don't report till the 6th. So that's not accurate. I'm sorry. No, it's not accurate. It's giving me everything. I don't know. I would guess Amazon or Chipotle just from the price on that one. You feeling positive about UPS earnings? All right, good. Well, that'll certainly help the market. You want a catalyst to push us to highs faster. If UPS could show some good numbers there, yeah, that could do the trick. Yep. Altria, yeah, I've been watching Altria. We own it, so it's kind of interesting to watch there. Philip Morris as well, coming up off the lows there. So all that hype and everything over it, yeah, very nice little bounce off that one so far. Yep, I agree. What are your thoughts on Netflix selling the bonds? They have to, right? I mean, they got to raise a bunch of money. What was the? I put it in the scroller below. They got to create the content, which I spent this weekend digging through Netflix a little bit. There's really a lot on there that's their content. They're really going for it. I haven't looked in the past, but I thought do a little research there. They got to do it. I don't see any other way for them to do it. They raise the money because they can, by the way. There will come a time where it's going to be tougher. Do we work with investment clubs? We used to, locally here. I don't know what working with investment clubs means, but we used to quite a bit, actually, just because we were into that. I thought about opening up this whole thing again when the weather changes and just kind of saying, hey, let's come by, let's just talk shop and stuff if that's what you want to do. Yeah, start our own investment club. Edward, should you stay on the target fund or should go in the S&P? I have no idea. I can't give specific advice on that anyways, but you got to look at the difference between the two. Are you too heavy in the 2045? Is it more of one of those conservative 2045 funds that I kind of pick on a little bit? It may not even be that you need to change the S&P. Maybe there's something better for you there. I think you got to do a little homework there. When are you going to play the drums? Yeah, it's kind of like singing in the shower. You sing in the shower. I play the drums late at night. Put the headphones on and get lost. I love it, Eric. Thanks for the comment there. Other than that, I think we've nailed it. Remember, no closing beat tomorrow. We will not be here tomorrow. We'll be back on Wednesday. But in the meantime, I have to say thanks for watching. Thanks for keeping us in mind there. Thanks for hitting the subscribe button or anything you decide to do to help us out. Always a good thing. I appreciate it. And you guys have a great rest of your day. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.